It might feel comfortable to run with the crowd. We all do it at different times, but to make money in the share market, you got to veer away from the crowd and venture off by yourself and pick stocks that no one else is looking at. Chris, what is the thing that everyone's got factored in that might unravel during 2018 in the equity market?
That Amazon will not destroy Australian retail. We just think it's overblown. Longer term, Amazon will get a decent footprint here, but medium term, 1 to 5 year view, it's going to take a number of years to get going. So I think the discretionary retailers have been oversold this year.
Well, for me, it's probably that there's going to be an acceleration in the mining services sector. That's fully factored into a lot of prices in the area. And I think it might be a bit slower and more muted than the market's anticipating.
The actual operations or the share prices?
The operations of the mining services sector, and given the PEs that we're now seeing, which are factoring a continued real resurgence in 2018, might not play out as well. There'll be some that I think it does, but across the board, I think it seems like a bit of a crowded trade now to me.
I'm going to go global. I think it's US tax cuts. Everyone's talking about it. It's the most discovered trade. Everyone's factored in, and it probably won't have the impact that all the bulls are hoping. So US tax cuts won't drive the market.
Well, it's the fact that the RBA are going to hike rates. No one's, the whole market isn't expecting it apparently. They'll hike rates. It will change everything. The bond, all the infrastructure stocks will weaken off. That will sort of see a rotation take place. It hasn't taken place so far yet.
I'd say it's a thing rather than a stock, and that is everyone's betting on lower interest rates. What I mean by this is if you're long Sydney house prices at 2% yield, you're betting on lower interest rates. If you're long high yield stocks, you're betting on lower interest rates. So I think you'll find out next year with global rates going up that trade doesn't work.
Well, I think globally it's actually bearish China. I think there's a lot of China bears, a lot of people worried about debt loads in China. I'm very bullish China, and I think that's one thing that could change next year in markets, the perception of Chinese GDP growth. So that's the one thing I'm most contrarian on.
Good for cyclical stocks. Okay, let's get down to tic-tacs. One stock that's going to really perform well in 2018. What is it?
Number one pick is actually listed in New York. It's JD.com. It's the Amazon of China. I think it could double next year. It's only got 1/10 the market cap of Amazon. Huge addressable marketplace. 55 billion market cap. That's my number one pick for next year.
All right, I'll take the first 30%. You can have the last 70.
Well, hopefully Aristocrat. They had another fantastic result a couple of weeks ago. Pretty muted share price reaction due to the acquisition of Big Fish and also the lack of earnings guidance. But we think this is a really quality business that's going to continue growing strongly. Over 60% of revenues are now recurring. About 40% will come from digital. It's a great management team. It's in a really good growing space and trading on sort of 22 times this year's earnings. I think it doesn't look too expensive.
Give us an upside target.
It wouldn't surprise me if it got to the high 20s, $28, $29, maybe even $30 this year.
I'm going to go with the ugly part of the market. And the good thing about this stock is we'll know by about February. I'm going to go the reject shop. Hated in the market, tripped over a few times, trades on a single digit PE. I think they've got the inventory right. They can trade through Christmas, which is a big part of the year. We'll know by about late January, early February. If they do that, I think the stock could be up 40, 50%.
So it's a small stock most of you have never heard of called Deutsche Bank. And as a global house, I'm choosing what stock here. I think you'll find with rates up, Europe doing okay, global GDP. We've got some call options struck 40% above here. We think they'll be in the money.
Go the Germans.
Look, I like Afterpay. I think it's an absolute screamer. I don't know if you know much about it, about $1 billion market cap, but they've got 40% EPS growth this year, 50% next year, and multiples going beyond that. They're growing, they haven't even scratched the surface yet on the number of clients they're going to sign up, and also they haven't scratched the surface on just what they're going to do globally. This company is going to do very, very well over the next 3 years, actually.
So pay up now for some Afterpay.
Afterpay.
Emeco, EHL, capped at $650 million, still undiscovered, not well owned by small cap managers. One of the most highly levered stocks to the improving mining cycle. Good acquisition of Force equipment in the last few months, so we think that one goes a lot higher. Could almost double over the next 12 months.
24 cents to 48. We're locking in on that?
Lock it in.
Thank you.